Good morning, everyone. Thanks for joining us this morning. Glad you could join us here on a Wednesday morning. We're glad we could also be joined a little bit later by Craig Geiger, our regional rep from Lincoln Financial Group. So we're glad to be joined by here, Craig, shortly. And we're going to be going over some really good information, going through 2021, what Lincoln Financial has to offer to the agents in the field and clients regarding some of their specialties in the annuity market space right now. And we've got a lot of really good programs going in that area. So I'm glad to have Craig available here today with us, and he'll be joining us here just in a few. We'll go over a few items here to start with. I know we do nice producer perks here in 2021. You can receive some additional benefits based on your production here. The first 180 days of being contracted, we've got different levels of enhancements here. You have a $100,000 level all the way up to $1 million. You can get cash incentives, iPads, different lead programs, including a radio show. We got different mailings you can qualify for, of course. If you reinvest your additional information into creating more leads, then you're going to, of course, maximize your return based on your production. It's a great way for you to get in front of more people and really expand your bottom line. So, David, take a look at some of those features there that we have available for you based on new producers. A couple different other systems we have is our referral program. You refer agents to IMES and they get contracted and they do business, and you receive an override based on their production, be it annuities, life insurance, single premium life, whatever it might be. You get a nice little spiff based on that. We also have our marketing reimbursement program. We reimburse $100 for every $100,000 of indexed annuity premium you do through IMES. A great way to build up a nice little account for marketing expenses. I know we also have reimbursement based on life insurance premium, on single premium life and life target. So a good way to get that account built up. We reimburse half of your costs. So if you do a seminar where it costs about $3,000 to put it on, we'll reimburse up to $1,500 of those expenses. And a great way to help IMES help pay for some of your marketing costs. So definitely a nice feature we offer here through our office. We have a great back office support team between the new business team, the creative team, the marketers. We have a lot of great experience here at IMES. I know I've been here for over 25 years, so a lot of experience on the insurance side, on life insurance and annuities. And we've definitely seen a big growth in business the last decade on premium. And there's a lot more money out there these days, it seems like, with 401ks. Of course, with all the additional government expenditures, we do definitely see a lot of money flowing around right now. So good way to get a hold of some of that cash, put some people in some safe positions. I know we do quotes if you need any annuity quotes, life insurance quotes. Maybe want to take a look at a income rider situation where your client's looking for the best payout for income. We have all that available. A lot of it's available on our website. And I know we also offer a really good e-app solution through Firelight. It's a great paperless app program we have. Most of our carriers are available on that. We do have some that'll be coming on soon. I know that Lincoln Financial is one of our key companies we have that's available on that Firelight system. And the good thing about using Firelight is when you get the application signed, it goes into the home office. We automatically get copied on that. It goes under your information on our CRM. And that way we can keep really good track of that business as it flows through the system. And with the use of the e-apps, of course, they have to be 100% complete before they go in. So there's really no missing information. Of course, they will still look at suitability, make sure the client is suitable for the contract, and then you move forward from there. Really speeds up the process. I mean, I'm guessing it probably speeds up by a good week. And then flowing through the suitability channels and everything else that happens with the business, it definitely is a great use of your time by learning how to use those e-apps. Our creative team, there's a great group of people we have on that side that can help you out with website development, doing mailing campaigns, e-app promotions. Maybe you want to do some social media advertising. They can help you on that end of it. I have lots of good experience on putting together promotional activities with clients. and putting together business cards, brochures, postcards, mailing information. Maybe want to look up, redo your design on your logo as a company. Maybe change some of your colors on your company. They can help you with all that information. So really good go-to on the creative team. As I mentioned, we have got a great website. You can utilize the www.imsinc.com. We have a lot of supply information on there. We have industry links. Maybe look up an AM Best rating on a company. Maybe look up tax information. Different things that come up during the day. We have a lot of good links on our website. Maybe we'll go to a state insurance department website. A lot of good stuff you can utilize on that IMS Inc. website. We also have some great quoting tools. As I mentioned, you can do term insurance quotes, long-term care quotes. You can do annuity quotes. I mean, you can look at a lot of different information on our website. We got some good sales ideas in the sales library, and really some good information you can take advantage of based on getting on the IMS website. We also have our current annuity rates on there. You can go to our rate watch and pick up information on the latest MYG rates. Maybe you're looking for the best 5-year rate for an 85-year-old in Pennsylvania. You can pop that up and be able to get that right off the website. So really good details there. We have a retirement analyzer program, which is really a nice software program you can utilize with clients. And it's really a good in-depth program to have. Gives you a lot of good information. You can go over with clients on pie charts, spreadsheets, go over different bits of information based on kind of where they stand now for retirement, based on their current savings, what they need to save between now and retirement to hit those goals they're looking to hit on income, safety. Maybe they're looking at buying a sports car when they retire. Make sure they have enough money to get that done, and along with have a very suitable retirement for them. This software program, I know that David Corwin and Mark Solar in our office are the specialists on that. So if you have like to have some information on that, definitely give them a buzz on that side of it. And I know we have a great wealth management team here. If you have interest in getting involved on the wealth management side of IMS, I know you want to get your Series 65. They can help you out with all that schooling and getting that passed. I know we've seen a huge increase the last 2 years on assets under management through the IMS Wealth Management team. I know we've seen almost a double in premium this year based on what's in there, based on new premium and existing premium. So we've really seen a nice growth on that side of it, and we really see a nice increase in that business. If you have interest in getting information on that, just mark off yes on the poll I just launched. If you want to get some information on the wealth management side of the business, I know we have a lot of different investment platforms. We have a great tool you can utilize that compares kind of some variable annuity information, what their actual returns have been compared to what else they can get into. And it's really a nice group of people that work in there. And we've seen a really big increase on our top 20 individuals. Majority of them are licensed now on the security side with their Series 65. Obviously, it's a great toolbox to have. You can have more options for your clients and what they want to invest their money in. And you'd hate to refer someone down the street. In the long run, you'll lose that client because the other individuals was able to do more for them based on securities and insurance. And it's always good to have some extra arrows in the quiver that you can utilize when you're meeting with clients. Maybe they've got a 401k. They want to move half the money into insurance on annuities or life insurance. They want to move the other half, keep that in securities. This way you can keep all the monies as opposed to passing half of them on. So we do see a number of clients recently that are splitting up their dollars. They're not keeping all of it in one nest. They want to have it spread around, and some different options. So definitely good to have that available based on your client's needs. I'll leave this open for another 10 seconds. If you have interest in having one of our IMS Wealth Management specialists give you a call, definitely mark off yes, and we'll go ahead and get that done for you. I'm going to go ahead and close that up real quick. And then I know that we have a trip we do basically every 18 months now. It's our top producers trip. I know we have one coming up in August of 2022. It should be a fantastic trip. We're going to the Italy on a cruise, Mediterranean cruise. So you can go around the country of Italy there. Number of stops in Croatia, Italy, Greece. A lot of really good information. It's a 19-month qualification. Qualification started the 1st of December of 2020, runs through June of 2022. Takes 4.5 million points to qualify. Really a great opportunity for you to meet other top producers, spend some time in some areas you may not have been before. Really good, cruise ship will be on. It's all inclusive, your food, your drink, everything's included. So really a nice package that you'll be getting on that trip. So I know I've got a number of bigger producers that are really pumped up to qualify for this trip. I know we've had a number of people already qualify for it. So, a number of people that are on track to qualify. So if you have some interest in getting on board, definitely give one of your sales marketers a call, see what we can do to help maximize your earnings and maximize production so can get you on board for that trip. So definitely a fantastic voyage we'll be taking here in August and September of 2022. We're available on Facebook and LinkedIn. If you're on the social media sites, you can get on either Facebook or LinkedIn. We'll be glad to have you aboard on those items. So definitely jump on those sides of our business. Be glad to get you going on that end. I'm going to go ahead and switch controls over to Craig. I know Craig Geiger is a great rep we've had with Lincoln Financial. He does a fantastic job on keeping us up to speed with what Lincoln has to offer. Gives us some great sales ideas, some great information that Craig has, and he'll be sharing some information with you all this morning. And welcome aboard, Craig. I'm glad you could join us today.
Thanks, Matt. Appreciate you guys having me.
You got it. I'll let you go ahead and take control. I see that you've got all your stuff online here, so you're good to go moving forward here.
Perfect. Thanks, Matt. Thanks again. And thanks, everybody, for joining our call today. I know you guys are busy, and you're out busy seeing clients now that everything's kind of starting to open up a little bit throughout the country. But just really wanted to have an opportunity to share some different ideas with you here at Lincoln. But before I even kind of get into our agenda, what I wanted to do real quickly is tell a quick story. As many people know, Mount Everest is the highest peak in the world. It's the highest mountain above sea level. And a lot of people know about Everest. Obviously, it was in the 1930s where Sir Edmund Hillary actually was the first one to climb Everest. But when you think about Mount Everest, think about climbing that mountain, getting to what's called the summit, or the top, if you will, of that mountain. The crazy thing is with Mount Everest is that over 50% of the injuries and fatalities on Everest happen on the way down, but not on the way up. And why do we think that is? I think the biggest reason is probably because so many people are so focused on getting to that summit that they don't put as much strategy and thought into getting back down the other side of that mountain without getting hurt. And the reason I bring that up is it's very timely when you consider the planning aspects of retirees today. When you think about the ascent, if you will, that's kind of like growing your assets or accumulating assets. And that summit is their retirement. That's their end goal, right? Is to get to that summit, get to that retirement, and have that retirement that they've always dreamed of. The thing is, though, there's really are two sides of that goal. There is that accumulation phase, which is growing those assets and getting to the summit, but we also have the distribution phase, or the descent, which is just as important. So Lincoln, we're very well positioned to help you on both sides of that journey, whether that's accumulating assets or whether that's distributing income out to those clients in the later years. So today's agenda is going to be talking about really three main things. One, the power of diversification. At Lincoln, we're very well positioned to give you a lot of choice and options. And at the same time, we're going to look at a true bond fund alternative strategy. And the key word is true, because we're one of the few carriers that have an index strategy that's really well positioned for that type of money for people that are looking for that fixed income bond fund type alternative. We're also going to talk about the grow and spend. And then when I say grow and spend, I mean grow and spend for me, or maybe grow and spend for my beneficiaries. So, when you think about just what's gone on in the last year and a half, think about this. Think about an opportunity where there might be, think about it. 1/3 of all advisors found that in the Fidelity strategy that we did last year during March to June of last year, 1/3 of all advisors or 1/3 of all clients sold all of their equity positions during COVID, and they did not get back in the market. If you think about that, 1/3 of all clients age 65 or older sold all of their equity positions. So when you think about that, you think about what's going on today. There's still been a huge surge in cash over the last 60 days. There's been a bunch of money that's gone into the money market accounts. $3.6 trillion is sitting in money market accounts currently. So a lot of times, a lot of that money that was going out of the market has never really come back into the market. So the question is, what do people like that do right now? What do those people do? So when you think about this, you think about diversified accumulation, think about choice. And it's all about having the opportunity to give that client the opportunity to have tons of different choices within their index annuities. And Lincoln, our OptiBlend Index Annuity Series, is our top index annuity product. It comes in a 5-year, a 7-year, and a 10-year duration. And as you can see here, we have a fixed account. We have a 1-year Fidelity strategy that's a par strategy, has 125 blue chip dividend paying stocks, includes dividends, and is really a great opportunity to give clients the opportunity to be invested in an index that's more geared toward blue chip dividend paying stocks. We also have a 1-year index strategy that's an uncapped strategy that actually does not include bonds, believe it or not. When you think about uncapped strategies that have a spread or a volatility type control index, most of these indexes almost always have a bond component. When you think about a bond fund alternative, that's the one thing you're trying to get away from is bonds. And this actually does not have any bonds in it. So it's the S&P 500 and cash. But the other important point to point out here is it does include dividends. So dividends are so vital. If you look at the S&P 500 over the last 30 years, 50% of the return of the S&P is dividends. So having dividends included in the calculation is huge. And of course, we've got the annual cap, and of course, we've got a 1-year S&P par. And as you can see, that it's going to vary based on the different strategies that you pick in the different durations, whether it's 5, 7, or even 10 years in our contracts. But at the end of the day, though, it's not just about having really competitive first-year rates, because any carrier out there today can do that. It's really where you earn your stripes is in the renewal rate years. And Lincoln is very well positioned. It has a great reputation for having consistent and strong renewal rates in the renewal rate years, which are just as important as those first-year rates. Because, again, when you go into that second, third, fourth year, you want to be with a carrier that has a consistent renewal rate strategy to keep their renewal rates competitive. And as you can see here, if you look at the average on our OptiBlend 10 contract, which is our flagship contract, 94% of the original cap was consistent over that time. So when you think about someone who had a 5% cap, they really have the opportunity to get 94% of the original cap in the second year, and so on. So it really puts them in a great position to know that, hey, I got a competitive product that has a great first-year rate, but I'm with a carrier that has good and strong, consistent renewal rates. So not only do we have this piece that kind of talks about that renewal rate strategy, we also have a brand new redacted statement that kind of gives advisors the opportunity to kind of look and say, in the 2019 OptiBlend 10 contract, if I look at this particular contract and I look at how it would have renewed, this actually is going to show you what the 2019 first year numbers were and then what their 2020 renewal rate numbers look like on this particular contract. So definitely something that kind of reinforces our value proposition here at Lincoln, give you not only competitive first year rates, but have strong renewal rates as well. So, one thing I mentioned earlier, I talked about that bond, we talked about the bond fund alternative. It's all about giving clients the opportunity to give them something that can be a better alternative than bonds. And we all know that bonds have been a great place to be over the last 30 to 40 years. But the tide's turning. And as we know, with interest rates moving up, with inflation concerns out there, with all the things that are going on with taxes and a lot of things that are in the Biden tax plan, there's a lot of things that are out there that are certainly potentially going to be driving up interest rates and at the same time a lot of other things. But when you think about that, everyone who's looking for a bond fund alternative, they're obviously looking for a way to obviously give that client that principal protection that they want, alleviate the interest rate risk they're going to have with bond funds, but at the same time, give that client more upside potential or more growth opportunity, and of course, have no fees. So when you think about that, again, our 1-year S&P 500 daily risk control spread, this is an uncapped strategy on the S&P year to year. On OptiBlend 10, currently, it's only 50 basis points spread. Again, it's only 50 basis points. So the return was 8% that client's going to get 8% minus the 50 basis points. So they're going to net the entire difference there. So when you think about this as an opportunity, it's a very easy to explain index. It includes dividends, but it does not, keyword, does not include any bonds. So just the S&P 500 and cash, and does include dividends. Now, at the same time, we also know that it's good to have diversification and choice, if you will, in an index strategy. And another strategy that we had that I mentioned earlier is our Fidelity AIM Dividend Index. This is a proprietary index that we have with Fidelity. And where this is a good diversification tool is it gives you a kind of a little bit different flavor, if you will, than just being tied to the S&P 500. This is focused primarily on 125 or so blue chip dividend paying stocks. And of course, it has a short-term treasury component to it. And of course, it has the component of the stocks. And your client's going to get a percentage or the par of whatever that index is going to do for that year. Now, the key part of this is not so what's important about this is because if you think about blue chip dividend paying stocks, it's all represented about dividend paying stocks. And again, 30%, if you look at the last 30 years, 50% of the return of the S&P, again, is dividends. So it's really important to have that. And this strategy over the last 10 years has done over a 7% return. But it's not just about that. It's all about the transparency. Lincoln's one of the few carriers out there that actually publish the stock holdings in this index to not only know what's in the index, but what percentage weight each stock makes up in the total index. So definitely something that gives you complete transparency in terms of what the index can actually do. Now, when we kind of put this kind of pen to paper and we actually look at it on a quote, what I did here is I read an OptiBlend 7 quote. I put 75% in the 1-year S&P 500 daily risk control. Again, this is the uncapped strategy with only a 75 basis point spread. Again, the client gets everything above that number. And then I put 25% in the Fidelity strategy, which currently has a 75% par. Now, when I look at this, and I put $100,000 in this contract, in the last over a 30-year period of time, it would have done a 5.56% return. Now, if I look in a growth market, in a down market, in a growth market, you can see it did over an 8% return. And in a really down market, like the lost decade, 2000 to 2010, it still did almost a 3.8% return. So definitely a great opportunity for people that are looking for that, maybe that equity protection strategy or that fixed income alternative. We have OptiBlend 5 as well as the OptiBlend 7 that could be a great fit there for that shorter term accumulation client. So as we kind of can transition over, if you will, let's talk about taxes. Because the one thing I mentioned earlier with the Biden tax plan is and one thing everyone's in agreement with, no matter what's on the table with the Biden tax plan, is most likely tax rates are probably going up. And we've seen tax rates be much higher than they've been now. If we just look at like today, right now, it's about 37%. And if we look at 1984, 1960, you can see those numbers are significantly higher, and they have been in the past. So it's not to say we can't see tax rates be on the rise in a big way. We just don't know where they're going to land, of course. But the reality is it's definitely an issue. We think that tax deferral is really going to kind of come back into vogue, especially if tax rates really start to climb upwards. When we think about that, we think about the opportunity for annuities to kind of go back to the basics, if you will, utilizing the annuity for that tax deferral and be able to grow those assets. Now, obviously, when you think about grow and spend, like I mentioned earlier, it could either be grow and spend for me, for my client right now or down the road, or maybe grow and spend for my beneficiaries if I'm going to leave a legacy. So let's talk about leaving a legacy for the beneficiaries. If I think about that, a couple areas where Lincoln can really be a unique carrier for you and be a partner for you in 2021 and beyond is think about the non-spousal Benny IRA stretch. There's not a lot of carriers out there that are allowing you to do the full 10-year stretch. Lincoln's one of the few carriers out there where you can do that, where you can utilize our contracts to do that 10-year stretch. Now, if the death occurs this year, you can utilize certain contracts. If the death occurred last year, you can use other contracts in the Lincoln portfolio, which Matt and his team can certainly walk you guys through. So definitely a great opportunity to give those beneficiaries the opportunity to stretch that out over a longer period of time. And at the same time, we also know that with tax rates going up, that everyone's concerned about taxes. Well, think about clients that have pretty sizable traditional IRAs out there they've never converted over to Roths. Now might be a great time to start talking, hey, maybe we should move this traditional IRA over to Lincoln And let's do a partial Roth conversion over the next couple of years. Let's stretch out that tax burden over a number of years so it doesn't bump you up into the next tax bracket, but be able to start slowly converting that money over into Roth slowly. And then, of course, giving your beneficiaries far more tax efficiency when you pass away. So definitely some great opportunities where Lincoln can help you there as well. And then lastly, it's all about that grow and spend for me. Now, obviously, there's income riders out there. You've got SPIAs, you got DIAs. There's a lot of other income sources you can go to for income. But one thing we've definitely seen at Lincoln as a huge trend is think about going back to the basics again. Think about income riders that, during COVID. One thing we know about income riders is the withdrawal factors went down and the costs went up. And then also typically when you're picking the income riders, you're usually going to get a much lower cap or a higher spread or a lower par when you're doing the income. So there must be another option or another alternative that we can go to for my client who maybe needs income later. So what I did here is I ran OptiBlend 10, which is our flagship contract. Again, I put 75% in that S&P daily risk control. Again, uncapped, includes dividends, no bonds. It's only a 50 basis point spread. Client gets everything above that number. And then I put 25% in the Fidelity strategy, which currently is at 100% par. Now, what I did here, just to kind of lay out kind of what we're trying to do here, is I put $100,000 in. I let it grow for 5 years, and then I started doing a 5% spend down strategy beginning in year 6. So I did a 5-year deferral, let that money grow, and then after 5 years, I started taking a 5% spend down. As you can see here, I'm taking that consistent income off for the client. I'm getting income throughout those years, and at the end of 30 years, the client's taken $219,000 and some change of withdrawals. The contract average is 6.13% return, and the client still has $161,000 and some change left over of account value. So they have all their principal plus interest still left in the contract, even though they've taken $219,000 in withdrawals. The opportunity is the clients be able to grow the asset, be able to produce consistent income, save themselves about 1% in rider fees every single year for the last 30 years, and still have the opportunity to have competitive caps, higher pars, lower spreads, more growth opportunity for the clients. So definitely a great opportunity for you if you're looking for that income rider alternative. Lincoln's very well positioned to help you with that as well. So let me go back to where we started. When you go back to that agenda. So again, a power of diversification, giving the client and you the opportunity of choice around various index strategies, as well as having a company that's a very strong renewal rate strategy like Lincoln, as well as giving you a true bond fund alternative strategy. Again, if we want a true bond fund alternative strategy, we're trying to actually get away from bonds. And the fact that we have an uncapped strategy on the S&P that does not include the bonds, but does include the dividends, that only has a 50 or a 75 base point spread, and the client gets everything above that number. Great fixed income alternative story. And then going back to that grow and spend for the beneficiaries, the Benny IRA stretch opportunities. Lincoln's one of the few carriers that are doing that type of business where you can do the 10-year stretch. Roth, part of the Roth conversion opportunities are huge. And of course, again, if you're looking for that grow and spend where you're utilizing a strong and competitive index annuity strategy product that has got good caps, low spreads, high pars, and have a spend down strategy and save the 1% in fees every year on the rider and doing this as an alternative to the income rider type business, we can also be a great place to be at Lincoln to help you. And then just a call to action here, guys. Just think of 5 clients. Either one are sitting in cash right now. Like I said before, there's $3.6 trillion sitting in money market accounts. To put this into perspective, guys, during COVID, there was $3.8 trillion in money market accounts. So it really hasn't changed a whole lot since COVID to now. So there's a lot of people that probably want to maybe get out of cash and do something, but they're probably concerned about, market volatility. They're concerned about their principal. They're concerned about loss. A fixed index annuity can be a great alternative to give that client that principal protection, growth opportunities, and of course, no fees. And then lastly, obviously think about clients that, are highly invested in bonds. Maybe they want to de-risk that part of their bond portfolio. Typically a lot of clients do a 60-40 portfolio, 60% equities, 40% bonds. Maybe look at doing a 60-20-20. I'm seeing that more and more now. Clients do 60% equities, 20% in FIA, and then 20% in bonds. You're increasing the client's alpha, you're reducing their beta, and giving them a little more protection on that fixed income portion of their money. And then lastly, think about clients that are scared to get back in the market, that are concerned about market volatility. Now might be a great time to tell that fixed income story, a fixed index annuity story, and give them the opportunity for growth and principal protection. Again, no fees. So with that, I'm going to throw it back over to Matt and have him close us out.
Hey, appreciate it, Craig. Great presentation there. I know that I get a lot of calls, on a consistent basis with clients who are getting their income rider charges, show up on their statements. A lot of clients don't like that when they see that they've taken out, $5,000 out of their account, and there's another $2,000 taken out for those expenses. Those expenses really add up, and a lot of concerns with clients. I really like the grow and spend, option that Craig gave, and the fact that your clients earning really good returns along the way, and they're still taking out their 5%, withdrawals. They're getting the best of both worlds. They're not paying a fee, they're earning really good returns, and they're still getting their income. And if you take a look at that combination, it's really a win-win. It's a win for the client and a win for you, because if they're earning good money along the way, and if interest rates start going up, let's say the client has a 7-year contract and 7 years from now, the new cap rates, the new interest rates are higher, you can reposition that money to an updated Lincoln, contract, and then they're going to earn higher interest, still be able to take out their 5% withdrawals, and then you earn another compensation on that. Really, it's a good way to keep a client involved, because what happens is when you buy these income riders and the client's doing their lifetime income, you have lost that client for taking them anywhere else. I mean, once they start that income payment, they're locked in. I mean, it's like almost like a SPIA. And the only way they move is that they can really enhance their situation. And unfortunately, what happens is when they're taking that income out and they're also being charged and they're earning less returns, their values really start dropping on their accounts. I mean, they're going to lose, 5 to 8 to 10% per year of their value, and they're going to see their account values really start dropping. And that's when they start getting concerned about, what am I doing? I'm not going to get any money passed on to my spouse, or I'm not going to get money passed on to my kids. And with Craig's example, I mean, you've taken out over $200,000 of withdrawals, and you still have $161,000 that can go to your beneficiaries. That is really not seen on income rider contracts. I mean, if you took out $200,000 withdrawals, chances are your account value is going to be at zero. I mean, there's going to be no money going to the beneficiaries. So really something to keep in mind with the costs of these riders, the fact that most companies charge on the value of the income account as opposed to the accumulation account. There could be some pretty drastic differences in values, and it really ends up costing your client a lot of money on those annual statements where they're paying 1 to 1.5% charge on those accounts. Whereas you go with the no charge side that Craig went over, you're really going to see some win-wins for you and the client. So definitely something to keep in mind. I'm positioning a lot of people into the idea that Craig had with either no income rider or a free income rider, and there's no reason to pay for something your client might not need, and it's just a way for your client to also earn more money. Is because typically these income rider accounts, the accumulation side is drastically affected on rates of returns. I mean, instead of earning 6% return, you'd be lucky to make 3. I mean, if you take out the fee, you take what they're earning, you're going to be more in the 1 to 2 range on returns. So huge difference in values. So way to go, Craig. I appreciate that sales idea today. Anything else you want to close up with here, Craig, before we end the webinar this morning?
Yeah, I did. Thanks, Matt. I just wanted to reaffirm one thing. Lincoln is very competitive, not only in the first year, but the other thing I really want to have as a big takeaway is Lincoln is very well positioned and has a great reputation on renewal rates. And again, those renewal rate pieces that I shared, Matt can certainly send out to you guys. It's definitely something that really reinforces that not only are we competitive in that first year, but we're really committed to being competitive in those renewal rate years, which we know is just as important as the first year. So, and obviously having choice and having competitive compensation, which Lincoln has as well. So just want to thank everyone for their time, And thanks again for everyone for being on today's call. Appreciate it.
Hey, thanks, Craig. And as Craig mentioned, the stretch accounts, as we see people living longer, and I know I got a client I'm working with right now that's 97, and they have huge gains in their non-qualified accounts. And when that client passes away, I mean, and their beneficiaries are really going to be needing some tax advantage situations, especially if tax rates keep climbing, they need to find a way to stretch that damage. I mean, they don't want to pay it all up front. Let's stretch it out over a number of years. And with the Lincoln Financial stretch options they have on qualified and non-qualified accounts, it's really coming to play right now. I know I've sent some really nice cases to Lincoln on stretch situations. So, and typically on those stretch accounts, those are much bigger tickets. I mean, you're looking at $500,000 to $700,000 tickets with some huge gains in those, as opposed to, a $20,000 deal or a $30,000 deal. When you get a hold of those stretch accounts, qualified or non-qualified, those are typically larger items. So definitely something to look at. And with some of the new rules and regulations on these stretches with qualified accounts, Lincoln's got the resources on, 5, 7, or 10-year contracts that can be utilized based on when the client passed away. And with the non-qualified stretch, very few carriers do those, and it's a great way for a client to maximize that tax deferral. Otherwise, everyone have a great week. I appreciate their time this morning. Again, this is Matt Tour. If any questions, give me a call at IMS 800-255-5055. I'm in the annuity marketing side. If you have another specialist here you work with at IMS on the annuity end, definitely give them a call. Be glad to get the Lincoln information over to you. I did have a poll that went out earlier. Anyone that answered yes, I'll be giving everyone a call and then getting you out the information you're looking for on Lincoln. And let's see if we can't close some really nice cases here in the next few weeks. Otherwise, everyone have a great week. Enjoy your spring, and we'll talk to everyone soon. Thank you.